Hello everyone, good morning, good afternoon, good evening, depending upon when you are watching this video. In the earlier sessions, in relation to the clubbing provisions, we discussed about various sections ranging from 60 to 64 where different clubbing provisions were applicable. I hope you already have gone through, and not only just gone through, but be very thorough with these provisions, and I hope you have revised the provisions also well. You can use this summary of the provisions which are given at the end of the chapter in ICA material also. That's a good tool of quick revision of any chapter. Same thing can be applied here also. So quickly, once again, to go through the provisions. Section 60 was about income transferred without the transfer of asset which is to be clubbed in the hands of transferor in all cases. 61 is about income arising from transfer of assets but revocable transfer of assets. Then income arising from such assets shall be included in the hands of transferor only if the transfer is revocable. Of course, there are exceptions to section 61 contained in section 62. Also, 63 defines what is a revocable transfer. All these things we discussed. Then 64.1.2 is a very important section wherein the income of spouse by way of remuneration that the spouse has received from a concern in which the individual, our SASI, has substantial interest shall be clubbed in the hands of the total income of individual, that is our SASI. Of course, if such remuneration is received due to the application of technical or professional knowledge or experience or qualifications of the spouse, then there is no clubbing. Otherwise, such income shall be clubbed in the hands of SASI. Then 64.1.4 is about income arising to the spouse from the assets transferred without adequate consideration. Then also income arising from such assets shall be clubbed in the hands of transferor, that is the SASI. Because section 27 is already there for house property, this section will not be applicable for house property, but essence is same, whether the asset is transferred as a house property or some other asset, clubbing is guaranteed. Which section is applicable, that only changes. 27 will be applicable if the asset is the house property, 64.1.4 will be applicable if the asset is any asset other than house property. Conditions of course are there. This transfer should not be in relation to an agreement to live apart. In that case, no need of clubbing. If there is adequate consideration, there is no need of clubbing. So clubbing provisions will be attracted when the transfer is without adequate consideration. So that is 64.1.4. 64.1.2, 64.1.4 both are related to spouse. 64.1.7 also is related to spouse only, where the transfer is indirectly made to another person, the benefit of which is coming to spouse. Same logic applies to son's wife also by virtue of 64.1.8. These all things in relation to this particular box are indirect transfers, though the transfer is not directly done by the SASI to spouse or son's wife. In spite of the transfer is not directly being made, if the benefit is coming to the spouse or son's wife, that is enough. Income from such assets shall be clubbed in the hands of the SASI. And there is other thing for generally related to income of son's wife resulting from the transfer of an asset which has been transferred by the SASI without adequate consideration, that also shall be clubbed in the hands of income of the SASI. So spouse as well as son's wife have two things in common. One is asset transferred without adequate consideration. Second is assets transferred indirectly to some other organization, some other person, but the benefit of which is coming to spouse or son's wife. In all the cases, clubbing provisions will apply. Remuneration provision is only applicable to spouse. that is not there for son's wife, so we should not create such provisions. Then coming to minor, very important section and very important provision. Income of the minor child shall be clubbed in the hands of the parent. Which parent? Such parent who has their income higher before clubbing minor's income. So that is the income of minor child. All incomes of minor child shall be clubbed except when that income is earned by applying manual work or application of skill, talent or specialized knowledge or experience, or if the minor is suffering from any disability specified in ATU, then also clubbing provisions will not apply. Whenever clubbing provisions are applicable, then there is an exemption under section 1032 for an amount of rupees 1500 rupees per child, which has to be compulsorily given for the parent in whose income the clubbing is happening. And one more point to be noted here, important point. In case of spouse and son's wife, income arising from asset is included in the income of the SSE, but income on income should not be clubbed. Whereas in case of minor child, income is clubbed, income on income also is to be clubbed. Any income of minor child except these two things have to be clubbed always in the income of that parent whose total income is or gross total income is higher before applying such clubbing provision. Of course, after an exemption of 1500 rupees per child under section 10 subsection 32. This section number has to be remembered, 1032. That is the clubbing provisions related to minor child. And some other points also we have discussed. Child includes stepchild or adopted child, that is one thing. And one more point to be noted, there is a specific point related to minor married daughter, though it is not particularly focused in ICA material, but because that is a twist point, that becomes important. In case of minor married daughter, normally clubbing provisions are applicable. Only exception is income from house property of minor married daughter shall not be clubbed. That is one exception also to be remembered. And we discussed section 64(2), which is also a special case where a person who has converted self-acquired property into a joint family property of HUF. In that case, income from such property will not be taxed in the hands of HUF. Rather, they will be taxed in the hands of transferor himself, because it is his self-acquired property. That is one level of clubbing. Next level of clubbing happens when the HUF is partitioned. If the HUF is partitioned either wholly or partially, and because of that partition, if the spouse of the SSE receives any income, or she receives or he receives any asset from which there is any income generated, that should also be clubbed in the total income of individual who originally converted that property. So at the time of converting self-acquired property into joint family property, entire income arising from such property to HUF shall be included in the hands of transferor. That is first level, when the conversion is happening from a personal level to HUF level. When the partition happens, HUF will give assets to different members. If in those members, if there is the spouse of the SSE also, then income arising from such portion shall be also clubbed in the hands of original transferor who has converted that property into joint family property earlier. So there are two layered things. First one is conversion of self-acquired property into joint family property. Second one is partition of HUF and assets being distributed to members of HUF. That is the point to be noted as a special case. Of course, not all of them can be asked in problems. If there is a problem also, there can be individual questions like 4 points, 5 points, depending upon the number of marks. Each of them can be a case-based question. So every provision, though these are number of provisions wise less, you have to be very thoroughly remembering them. Also, there should be another point to be noted, income includes loss. So wherever there is income we are talking, clubbing we are talking, that does not mean we are talking about only positive income. Even negative income also has to be clubbed. And additional points also we noted earlier. Income should be clubbed head-wise. Head by head income has to be clubbed, and also income has to be first calculated in the hands of the income earner. Then the clubbing provisions will start getting applied. These are all the various points which we discussed already, and we are just quickly recapitulating them. Now, after discussing some of the illustrations which were already given in the essay material, let us move on to the questions which were given at the end of the chapter. Let us start solving those questions one by one. Question number 1. Read it carefully. Mr. Sharma has 4 children consisting of 2 daughters and 2 sons. Annual income of 2 daughters is like this: 9,000 rupees and 4,500, and sons was 6,200 and 4,300 respectively. But the daughter who has income of 4,500 was suffering from a disability specified under section 80U. What does it mean? It only means that clubbing provisions are not applicable for related to that daughter who is earning an income of 4,500 since she is suffering from disability. Compute the amount of income earned by minor children. Earlier he never said these children are minors. Now the clarity is given. All these 4, both the daughters and both the sons, all the 4 of them are minors. How much to be clubbed in the hands of Mr. Sharma? He is asking. Simple calculation. Let us take daughter 1 just for understanding purposes. Don't use these words D1 and all. Only for understanding we are writing like this. D1, D2, S1, S2. In exam I have to write fully daughter 1, daughter 2, son 1, son 2. How much income is supposed to be clubbed? Daughter 1, she has 9,000 rupees income, and how much should be clubbed? There should be a deduction of 1,500, exemption actually of 1,500, which means what? Actual amount to be clubbed is 7,500 only. This exemption happens under section 1032. Daughter 2 has an income of 4,400 but nothing to be clubbed, nil, nothing to be clubbed, 0. Why? Because she has a disability, and any minor child suffering from disability, such minor children's income shall not be clubbed at all. Then son 1 is having how much? 6,200 income, and son 2 is having 4,300 income. We don't need their sequence and all, just they are all names for us. Then naturally how much is the income to be clubbed after giving the 1,500 rupees exemption for each child. 1,500 is not for all put together, each child. Each child will get 1,500 exemption under section 1032. After giving that, this is the total income that is supposed to be clubbed in the hands of Mr. Sharma. That is 15,000 rupees is the answer. Compute the amount of income earned by minor children to be clubbed in the hands of Mr. Sharma. Answer is 15,000 rupees. That's it. These are all the provisions in relation to minor children mentioned in which section? 64(1) capital A. That section must be remembered, and this is the solution in relation to this question. Moving on to the next question. Question number 2. During the previous year 1920, the following transactions occurred in respect of Mr. A. So these are all related to one person only, Mr. A. Let us read the question first. In these type of questions, you need to first of all go through the entire question, then only we will have a overall picture. But while reading, we can understand what could be the provision that is applicable according to the information available. So first point says, A had a, Mr. A is our SSE, what we are talking about, and this guy had a fixed deposit of 5 lakhs rupees in Bank of India. He instructed the bank to credit the interest on the deposit at the rate of 9% from 1/4/2019 to 31st March 2020, which is our year, means for the entire year, to the savings bank account of Mr. B. Who is Mr. B? Son of his brother, to help him in his education. So whatever it is, A has transferred an income from an asset without transferring the asset. What is asset here? Fixed deposit. What is the income here? Interest on fixed deposit. 5 lakhs rupees, 9% interest means that is going to be 45,000 rupees. Here interest is transferred to Mr. B, somebody else, whoever it could be. No need that that person should be related party. If income from an asset is transferred without transferring the asset itself, which section will apply? Section 60 will apply, and section 60 says such income shall be clubbed in the hands of transferor. And who is the transferor here? Mr. A. So how much income should be clubbed here? 5 lakhs into 9%, because this is there for the full year. Entire year is there. So 45,000 should be clubbed in the hands of Mr. A. That is first point. Second point, Mr. A holds 75% profit share in a partnership firm. Immediately what should strike in our mind? This guy has a substantial interest in that partnership firm. That we know from this information. And Mrs. A, here no need of explanation. Who is Mrs. A? You cannot ask. Once this guy is Mr. A, Mrs. A means his wife. That is a spouse of our SSC. Received a commission of 25,000 rupees from that firm for promoting the sales of the firm, and she does not possess any technical or professional qualification. So will the clubbing provisions apply? Absolutely yes, they will apply. And which provision will apply here? 64(1)(2) will apply. That will be clubbed in the hands of Mr. A only, because his spouse is getting the remuneration from the firm in which he is having substantial interest. So this 45,000 also should be clubbed. 25,000 here also should be clubbed, since his spouse Mrs. A is not having any technical or professional qualifications to receive this commission. That is point B. Point C. Mr. A gifted a flat to Mrs. A on 1st April 2019. So he gifted a flat. Flat is a house property. During the previous year 1920, Mrs. A's income from house property, which is computed means already 30% deduction is given, and that was 52,000 from such flat. So which section applies here? Here 64 will not apply, 27 will apply, because in this case, even though the house property legally is in the name of Mrs. A, because A has transferred to his spouse for no consideration. When there is no consideration, then only we use the word gift. So A gave Mrs. A property without consideration. That means income from such a property shall be clubbed in the hands of transferor using which section? Section 27. So point number A, section applicable is 60. Point number B, section applicable is 64(1)(2). And point number C, section applicable is 27 but not 64. So that is the clubbing provision. Though it is not related to this chapter, but that is also clubbing. So it is also to be included in the hands of Mr. A. Then also what happened? D point, Mr. A gifted 2 lakhs rupees to his minor son, who invested the same in a business and derived an income of 20,000 rupees from that investment. So any income of minor should be clubbed automatically in the hands of parent, except under 2 circumstances: 1, disability; 2, skill, talent, etc. So both are not there, so 20,000 should be really clubbed. But the question comes whether this 20,000 should be clubbed in the hands of Mr. A or Mrs. A. Will it be decided because A gifted him 2 lakhs, because 20,000 is coming out of these 2 lakhs, should it be clubbed in the hands of Mr. A? Is there any rule like that? No. Income of minor child has always to be clubbed in the hands of that parent whose income is higher before doing this clubbing. So don't jump to conclusion. This 20,000 has to be clubbed in the hands of Mr. A automatically, not necessarily. Minor is a different provision which the clubbing happens in the hands of such parent whose income is higher before the clubbing of minor's income. So we have to check that. Till then we cannot jump to conclusions. But definitely this income has to be clubbed. That is for sure, because it is earned by minor. Then E point also, A's minor son derived an income of 20,000 rupees through a business activity involving the application of skill and talent. That cannot be clubbed. That need not be clubbed. So this minor son, whatever the income is earned by him through his skill and talent, will be taxable in the hands of minor son only. So 20,000 will be taxable in the hands of minor son, but not anybody else. So there is no clubbing for point number E. In addition to this, further information is given. During the year, Mr. A got a monthly pension of 10,000 rupees. So A is one who is probably retired, whatever it is, but that is why he is getting a pension of 10,000 rupees. Naturally, it should be taxable. Should remember, any periodic pension is automatically taxable for everybody. So 10,000 rupees is taxable in the hands of Mr. A. He had no other income. Mrs. A received a salary of 20,000 rupees per month from a part-time job. Once again, don't jump to conclusion that this job is in the organization where A has substantial interest. No, that is never something that is a point of assumption. It has to be given in the question. If she is doing a job, of course she can do a job. She can get income on her own. She is also a different person. Don't apply clubbing provisions blindly for everything. So 20,000 if she is getting, that's okay. That is her income. Definitely that will be taxable in her own hands, not to be clubbed with A's income. Why? Because no information is there where from she is getting this salary. Don't assume facts. Facts are facts. If they are given, they are given. Otherwise, don't assume them unnecessarily. Examine the tax implications of each transaction. That's what we did so far. And compute the total income of Mr. A, Mrs. A and minor child. So all the three he is asking to calculate the total income. So who are all the people here? Mr. A, Mrs. A, and who is the third character? Minor son. All the headings, everything is normal. That those have to be always done. You don't have to separately discuss about them every time. So statement showing computation of total income of the SASIs, you can say. Then you have three columns, Mr. A, Mrs. A and minor son. As I said earlier, ideally it should go head by head. Let us take one by one. You have to write full forms in the examination. First one is say salaries. Income from salaries, that is basically income from salary. How much for Mr. A? That is pension he is receiving. How much? 10,000 rupees monthly pension he is receiving, which means 10,000 into 12, that is 1,20,000. However, you need to remember that there is a standard deduction in salaries. How much? That is 50,000. So how much is taxable as a salary for Mr. A? Only 70,000. That is what taxable salary of Mr. A is. And Mrs. A is getting 20,000 rupees here from a part-time job. So let us see how much she is getting. 20,000 into 12, 2,40,000 minus 50,000 standard deduction, that is 1,90,000. Minor son doesn't have any salary income, so zero, nothing. Then is there any income from house property? Yes, there is. Income from house property is there. In whose hands? That is actually earned by whom? Actually earned by Mrs. A. However, by virtue of section 27, that should be clubbed in the hands of Mr. A. And how much is that? 52,000. It is already computed. Don't give any further deductions under section 24. But it will be taxable under whose hands? Mr. A. Amount is 52,000. That is income from house property. Then do we have PGBP? Headwise. PGBP do we have? Let us see if there is any PGBP. Yes. Because this guy, yes, minor son derived an income of 20,000 through a business activity. So that is his own income. It will be taxable in his own hands. And how much is that? He said 20,000. That's all, not per month. So entire amount is 20,000 only. That is PGBP of minor son, which will be taxable in his own hands because he earned it because of his skill and talent. No clubbing is required. So this is pension salaries. Salary is here also under salaries. Income from house property is there. And also there is another thing that has to be clubbed here in relation to the income from other sources. Also, there is a commission that Mrs. A has received from an organization in which A is having substantial interest. That should be also clubbed in the hands of Mr. A. So after knowing these incomes of individually these people, so income from house property is a clubbing thing. PGBP is related to the minor son himself. So one by one let us see other points if there are any. First one is income from other sources, that is going to be clubbed in the hands of Mr. A. How much is going to be that? 5 lakhs into 9%. Under which section this has to be clubbed in the hands of Mr. A? That is under section 60. Transfer of income without the transfer of assets. So how much is the amount there to be clubbed? 45,000. Second one, this is also actually salary only. You can say PGBP also for that matter, because commission received from a partnership firm as a partner is okay, but Mrs. A is not a partner, she is receiving it as somebody, but it should be clubbed in the hands of Mr. A, that is 25,000 for sure. You can add it to salary income itself, 25,000, salary income of Mr. A. Though salary or commission, remuneration, whatever name called, it is received by Mrs. A, it should be clubbed in the hands of Mr. A. So we add it there under the head of salaries. That is one more point to be added. Then third point already we did, and fourth point is to be decided in whose hands this 20,000 has to be clubbed, because whosoever is having higher income, in their hands it should be clubbed. Now let us see before clubbing whose income is higher. Mr. A has 1,92,000 income and Mrs. A has 1,90,000 only. See, very close here. If you directly blindly club in the hands of Mr. A, it would have been a problem. Imagine Mrs. A has 1,95,000 gone. That will be a wrong answer if we club it in the hands of Mr. A. So always minus income should be clubbed in the hands of that person whose income is higher before clubbing. But by the way, how much is that amount? 20,000 rupees is the amount. That is also income from other sources. But once again, 20,000 minus 1,500. Don't forget 1032. So 18,500 has to be clubbed. Means finally, what are the taxable things we are talking? For all the three SSCs. These are the final answers. Mr. A total, whatever is asked is total income, is 2,10,500. Mrs. A's taxable income is 1,90,000. Minor son's taxable income is how much? That is just 20,000. So all remaining things just you have to keep it blank. So this is the point here. This is minor income to be clubbed in the hands of that parent whose income is higher before doing this clubbing. Maybe already some other clubbing happened. That clubbing is different, this clubbing is different. Before doing the minor's clubbing, whose income is higher, in that parent's hand the income of minor has to be clubbed, which automatically means in any question, even though if the minor's income is given in the beginning, let us say, we should not do the clubbing immediately. We should wait till we find out which of the parents is having higher income. In this case, who has higher income? This Mr. A has higher income than Mrs. A. So this clubbing happened in the hands of Mr. A. That's it. That is a very common typical question, 4 marks question like that can be expected, but once again, this is only the actual final solution. You will get 4 marks or 5 marks for only this? Definitely not. You should write reasonable working notes and you should refer to sections also wherever possible. So standard deduction has to be definitely referred to. Section 16(1)(a) has to be referred as standard deduction. Income from house property clubbing happened under section 27 and minor's income is clubbed under section 64(1)(a). Exemption under 1032 is also there for 1,500 rupees. And you can write also another provision where minor's income is clubbed in the hands of the parent whose income is higher according to 64(1)(a). And here it is also 64(1)(a), since this income is earned because of his own special talent, nothing should be clubbed. So the provisions whatever we applied have to be written in the working notes. So 4 marks question means at least 4 or 5 working notes also to be written in addition to whatever we show as calculations. But answer finally is going to be this 2,10,500, 1,90,000 and 20,000. That is question number 2, which is also there in ICA material, but this was a past examination question also. That is given in the ICA material now, but earlier it was asked in exams. Now go to question number 3. Mr. A has gifted a house property valued at 50 lakhs rupees to his wife, Mrs. B. Don't say why she is not Mrs. A and all. It's okay. Her name is B itself. So, Mrs. B who? Wife of Mr. A. He gifted house property worth 50 lakhs to her. That's okay. That is not a problem because asset is not an issue. Income from that asset is what we are bothered about. Who in turn has gifted the same to Mrs. C, their daughter-in-law. So, A gifted to his wife and his wife gifted to the daughter-in-law. The name of her is C. Then the house was let out at 25,000 rupees per month throughout the year. 25,000 is the rent throughout the year. Compute the total income of Mr. A and Mrs. C. That is the question. First of all, the question comes once again, is this rental income taxable in the hands of Mrs. C or not? Is it taxable in the hands of Mrs. C or Mrs. B or Mr. A? Who is the guy? Who is the SSC? Who is the person? Which person this income is taxable? How much is that income? First let us see, then we can find out in whose hands it is taxable. And what is the rent here we are talking? 25,000 rupees per month. Means annually 3 lakhs rupees. But don't forget to give section 24 deduction. How much is that? 30% of the net annual value. Since there are no municipal taxes, anything given, gross annual value itself will be net annual value. So this minus this, and how much is the amount of income from house property we are talking about? That is 2 lakhs 10,000. This has to be deducted. So let us put it this way, and let us do this. So 2 lakhs 10,000 is the income from house property taxable. That is clear. In whose hands is the question? Mrs. C? No. Mrs. B? No. Mr. A? Yes. Why is that? Because A has transferred it to somebody, and that somebody, whoever that somebody may be, has transferred it to the son's wife of Mr. A. So if the transfer happened indirectly also to son's wife, for the benefit of son's wife also, if Mr. A transferred it to anybody, forget about Mrs. B. If Mr. A transferred it to some unknown person also, doesn't matter. Still, if finally that benefit is coming to the daughter-in-law, that is son's wife, automatically income from such property will be taxable in the hands of the original transferor. So in between Mrs. B is there or not there, that is not at all an important point here. A transferred a property to somebody, and finally that somebody has transferred the property to the daughter-in-law, that is son's wife, and benefit of that property is coming, benefit or income from such property is earned by son's wife. Automatically such income is clubbed in the hands of original transferor. So indirectly is the word which we have to invoke here. Naturally it will be taxable in the hands of Mr. A. That is first question. You have to write all this. Will your answer be different if the said property was gifted to his son, who is husband of Mrs. C? Naturally. Will there be clubbing here? No, no clubbing. Because the clubbing provisions are applicable only for son's wife, but not for son. Not for son. Of course, assuming C or the husband of Mrs. C is not a minor, with a common point, unless otherwise stated. Normally, already he is married means he is not a minor in general. So, there is no clubbing required if this property was gifted to the husband of Mrs. C, who is nobody other than the son of Mr. A and Mrs. B. So in that case, no clubbing will be required. Of course, naturally this 2,10,000 will be still taxable. Clubbing only we are talking. Are we talking about taxability, non-taxability? No. Everything is taxable according to the provisions of Income Tax Act. In whose hands is only the question. 2,10,000 in that case will be taxable in whose hands? The husband of Mrs. C, whoever his name may be, name is not given. So the husband of Mrs. C is the one in whose hands, or the son of Mr. A, both are same. Son of Mr. A is the person in whose hands 2,10,000 will be taxable in this case. If it was gifted by his father, no clubbing provisions will apply in that particular case. That is the solution for this. It's a case-based question. Question number 4. Another thing related to business. This point also very important to note. Proportionate amount of income has to be clubbed. You should remember that always. But read the facts carefully. A proprietary business was started by Srimati Rani in the year 2017. And as on 1/4/2018, her capital in the business was 3 lakhs. So what happened between 2017 and 18, we don't care. Starting point what was given to us is 1/4/2018. So 1/4/2018 is what we are talking about. That is the starting point of this particular question. 1/4/2018. And what was the capital then? That is 3 lakhs on that date. That amount is already given. Now what happened? Her husband has gifted her 2 lakhs rupees on 10/4/2018. Actually, it is better on 1/4/2018. Unnecessarily number of days and all, you don't need to worry about it. Let us say 10/4/2018 also, still we have to see what happened in that particular year. So, 2 lakhs rupees was gifted on 10/4/2018, which was invested by Ms. Srimati Rani in her business on the same date. And Rani earned profits from her proprietary business for the financial year of 2018-19, 1,50,000, that is this year, and the next financial year 19-20, 3,90,000. Compute the income to be clubbed in the hands of Rani's husband for the assessment year 2020-21 with reasons. So, capital is given on 1/4/2018, but when we need the capital, actually we need the capital always at the beginning of our previous year. And what is our previous year? We all know, 2019-20. Do we know that? We don't know that. So what is the profit earned in the year 2018-19? Original capital was 3 lakhs. What is the profit earned in the year 2018-19? That was 1,50,000. 1,50,000. That is a profit during 2018-19. But her husband has given how much amount here? 2 lakhs here also in 2018. So, of course, profit to be added to the capital. Opening capital on 1/4/2018 is 3 lakhs. Add profit for the year 2018-19 is 1,50,000. The gift given by husband, spouse, is 2 lakhs. That is the total amount of capital at the beginning of 2019-20. That's what happened. So at the beginning of our previous year, what is the total capital employed? 6,50,000. Now it's a simple point. How much should be clubbed in the hands of Rani's husband? How much contributed divided by total capital? You have to go back to the formula carefully. This formula has to be always remembered. Whatever income from business into amount invested out of the asset transferred divided by total investment of the transferee in the beginning of the year. So what is the amount invested here? 2 lakhs out of the gift. Entire amount is invested. Divided by 6,50,000. That is the total amount. Out of 6,50,000, 2 lakhs is the contribution of her husband, which means 20/65 is the amount to be clubbed of the profit of the previous year, 3,90,000. So how much should be clubbed here? 3,90,000. Look at the calculation carefully. 3,90,000 into 20/65. Why 20/65? 20 is the amount of contribution of her spouse, that is her husband, and 6,50,000 is the total amount of capital employed or investment in the business at the beginning of the year. So how much is to be clubbed is 1,20,000. Of course, you may say, what about the remaining thing? What is the remaining thing? 3,90,000 minus 1,20,000 is 2,70,000. This should be taxable in the hands of Rani. This is taxable in her hands only. This is not to be clubbed. This is taxable in the hands of husband of Mrs. Rani or Srimati Rani. So this is the calculation we have to show, and provision has to be written. Wherever amount invested in a business is there, then proportionate amount of the profit has to be clubbed in the hands of transferor of the asset. Naturally, the transferor is the spouse. So, capital we need to calculate in this case. It is not given directly at the beginning of the year. It is given 1 year before. Just there is one more year profit which is there. That's okay. Any profit will be added to the original capital. Capital on 1/4/2018 is 3 lakhs. Profit during the year 2018-19 is 1,50,000. Amount contributed by the husband is 2 lakhs. Total capital at the beginning of 2019-20 will be 6,50,000, out of which 2 lakhs is contribution of husband. So how much would be clubbed in the hands of husband? Naturally the proportionate amount, which is 3,90,000 into 20/65. Remaining amount will have to be taxable in the hands of Rani herself. No clubbing required for 2,70,000. 1,20,000 is to be clubbed in the hands of her husband. That is the conclusion for question number 4. Clear? Next, coming to question number 5. There is one more question. This type of question also was asked in the examination earlier. Mr. B is the Karta of a HUF whose members derive the incomes as given below. B is the Karta of HUF. So don't jump to conclusion that it is section 64.2. Let us see what is the situation. 64.2 is applicable only when a person who is having a self-acquired property getting converted into joint family property. Otherwise, there is no such requirement. HUF always will not include 64.2. When there is a partition, then that is a different story. So here, if there is a contribution by the SSC to the HUF, then only this 64.2 will be applicable. Otherwise, we don't have to worry about that provision. But fact is fact, Mr. B is the Karta of HUF. Members of that HUF derive the following incomes. What he is asking is no computation here. Examine the tax implications in the hands of Mr. and Mrs. B. That's all he is asking. Tax implications examine, he is saying. Means it is a theory question actually. Just have to write descriptive answers, nothing to calculate. No need to compute anything. Examine is the question. So one by one you can see income from B's profession 45,000. Naturally taxable in the hands of Mr. B only. It is his income. It will be taxable in the hands of himself. Naturally, no need of thinking about any clubbing. Simply it will be taxable in the hands of B under the head of PGBP. That should be the answer for first point. Second point. Mrs. B's salary as a fashion designer 76,000. Should it be clubbed? No. Just like that, don't apply clubbing provisions, nothing to club, because it is her income, her salary. She can work as a fashion designer, that is her skill, and she can earn income anywhere. Nowhere it is mentioned that she is earning this from an organization where Mr. B is having substantial interest. Nothing is mentioned like that. So no assumptions like that can be made. So Mrs. B's salary 76,000 automatically will be taxable in her hands only after a standard deduction of 50,000. So naturally how much will be taxable in the hands of Mrs. B? 26,000. That is the answer for question number 2. 3. Third point. Minor sum is there D. Interest on fixed deposit with a bank which were gifted to him by his uncle. Doesn't matter who gifted and all that. Finally what this minor son D is getting? Some interest on fixed deposits. Question comes, definitely is it taxable or not? Yes. In whose hands it should be clubbed? Income of that parent whose income is higher before clubbing. So already B has 45,000, Mrs. B has only 26,000 after standard deduction. So this has to be clubbed in the hands of Mr. B. Of course not 10,000. Why? There is an exemption under section 1032 of 1500. So how much should be clubbed here? Only 8,500. That's all. That is for point number 3. 8,500 to be clubbed in the hands of Mr. B since his income is higher before clubbing of such income. Next. Fourth point. Minor daughter P is earning from sports. Sports earnings should not be clubbed because minor daughter is earning income from her own talent. That is her talent. So nothing to be clubbed in anybody's hands. It will be taxable, but in whose hands? In her hands only. So it is not to be clubbed. And we are not asked about P. We are asked about Mr. and Mrs. B. So as far as Mr. and Mrs. B are concerned, this 95,000 is irrelevant for them. Nothing to be clubbed in either of these people's hands. Then fifth point, D's winnings from lottery, gross. Already gross, this is nothing to be grossed again. 1,95,000 winning from lottery, always taxable, no doubt about it. Question is, clubbing applies or not? Of course yes, because who is D? You have to refer to this. Minor son D. D is a minor son of Mr. and Mrs. B, which means his income, any income should be clubbed in the hands of that parent whose income is higher before that clubbing. So already we know Mr. B's income is higher. So 1,95,000 should be clubbed in the hands of Mr. B. If at all a computation is asked, then Mr. B will have all these following items. What are those? Mr. B will have if at all, it is not required actually, if it is asked, Mr. B, Mrs. B. Mr. B has 45,000, Mrs. B has 76,000 minus 50,000 will be only 26,000. Then clubbing of minor son's income 8,500 has to happen in the hands of Mr. B after giving exemption of 1,500 under section 1032. Then 95,000 should not be clubbed. 1,95,000 definitely should be clubbed. So we have these incomes now. Just taking the total of them, we'll get 2,48,500 should be taxable in the hands of Mr. B, and 26,000 will be taxable in the hands of Mrs. B if it is asked. Generally it will be asked. For a 4 marks question or 5 marks question, he will expect both explanation as well as computation. Computation is only 1 mark or 2 marks maximum. Explanations will give you more marks. For each of them you have to explain why you are treating like that. That is called working notes. If computation is asked, first computation, then working notes. If no computation is asked, just explain, examine the tax implications. So simply explain that. 45,000 will be taxed in the hands of Mr. B as PGBP. Then second point, 26,000 will be taxed after standard deduction under section 16(1)(a) of 50,000. 26,000 will be taxed under the hands of Mrs. B as income from salaries. 10,000 minus 1,500 after exemption, it will be clubbed in the hands of Mr. B according to 64(1)(a). Then minor daughter P's earnings will not be clubbed since she is earning it from a special talent, that is sports. Winnings from lottery of Mr. D, who is the minor son, shall be clubbed also in the hands of Mr. B because his income is higher before clubbing. Hence 1,95,000 should be added. By the way, 1,95,000 don't give once again another 1,500. Remember the characters are same. D is the same guy. Already we gave 1,500 here. So don't give 1,500 every time we club. It is 1,500 per child, not 1,500 for each income. So total income of D, the son of Mr. and Mrs. B, is 1,95,000 plus 10. In that you have to give a 1,500 exemption. So out of 2,05,000, 1,500 if you remove, that is 2,03,500 to be clubbed in the hands of Mr. B since his income is higher than Mrs. B before such clubbing. This is the final answer in relation to question number 5. These are the questions which are there in the ICA material. So question number 5 also we have completed. With this, all the provisions, revision multiple times, as well as application of the provisions in different questions and illustrations is already completed. Now quickly let us go through the MCQs in relation to clubbing chapter quickly. Income of a minor child suffering from any disability of the nature specified in section 80U. So what should be the correct answer? That is answer A, which is already known to us. I am just reassessing, reconfirming the answers only. To be assessed in the hands of minor child only. Will clubbing apply in this case? Answer is no. So naturally that income to be assessed in the hands of minor child only. Hence answer is option A. Question number 2. Income arising to a minor married daughter. Should it be clubbed or not? Yes. Just like any other, there is no difference here. Only exception is what? If it is given in the options, only exception will be income from house property. But he has not mentioned about income from house property. He only said income. So income arising to a minor married daughter to be clubbed with the income of that parent whose total income before including the minor's income is higher. Nothing different. Minor married daughter is nothing different from any other minor child. Only exception is what? Income from house property of minor married daughter should not be clubbed. That is a speciality. Other than that, normal clubbing provisions will also apply to minor married daughter. Then question number 3. Where a member of HUF has converted or transferred his self-acquired property for inadequate consideration into a joint family property, income arising therefrom should be taxable as whose income? It will be taxable in the hands of the transferor member. So whoever has transferred his self-acquired property to joint family property, it will be taxable. The income arising from such property shall be clubbed in the hands of transferor. Option is A. Correct answer. Question number 4. Reverse. If the converted property is subsequently partitioned among the members of the family, the income derived from such converted property as is received by the spouse of the transferor will be taxable in whose hands? Exactly the provision of section 64(2) is asked in these questions. This can be the summary of 64(2). This is the one. And same thing, if the converted property is subsequently partitioned and spouse of the transferor is getting some income from that, will it be taxable in the hands of spouse? No. It will be also taxable as part of the income of transferor member originally. That should be clubbed in the hands of transferor. Okay. That is the correct option for question number 4. That is D, Delhi. Then look at some of the straight questions. Exemption of a certain amount not exceeding the income clubbed is available under section 1032, where a minor's income is clubbed with the income of the parent. What is the maximum exemption available? Up to 1500 in respect of each minor child. Don't create new things. There is no rule here about 2 children and all. Don't mix up the provisions of some other chapters here. This is 1500 per child. That's all. No limit, nothing. So up to 1500 can be claimed as exemption under section 1032. So answer is A. Question number 6. Mr. A gives a sum of 1 lakh rupees to his brother's wife Mrs. B. Read it carefully. A gives a sum of 1 lakh rupees to brother's wife Mrs. B, and Mr. B, who is brother naturally of Mr. A, gives a sum of 1 lakh rupees to Mrs. A. This is like a cross transfer, very clear. A gives a sum of 1 lakh rupees to his brother's wife Mrs. B. Mr. B, who is the brother of Mr. A, gives a sum of 1 lakh rupees to Mrs. A. And from the sum gifted to her, Mrs. B invests in a fixed deposit. Income from is 10,000 rupees. The question is, therefore said 10,000 will be included in the total income of who? And who invested here? Mrs. B has invested. And who gave this 1 lakh to her? Mr. A. So should it be included in the hands of Mr. A? Answer is no. No. It is a cross transfer. So though on the face of it, this is exactly the same thing what we were discussing in the earlier session, like this. Look at this. Same thing. Mr. A has transferred to Mrs. B. Mr. B has transferred to Mrs. A. Of course, here the amount is 1 lakh, and here also it is 1 lakh. Of course, the amount of interest here is nothing like that. So say 10% is the amount that is earned. 10,000 is earned here. Not here, only here. Question is this. This is the question. Understand the question carefully. A gave a property, that is money, asset, to Mrs. B. B gave an asset to Mrs. A. That's what is given. A gave 1 lakh to Mrs. B and B gave 1 lakh to Mrs. A. This is a cross transfer. Now what is talking about is income of Mrs. B. Mrs. B invested in fixed deposit and earned 10,000 rupees. So where this should be included in the income, of whose income it should be included? Because she received this from Mr. A, should it be included in Mr. A's income? No. Answer is no. Though it looks like on the face of it, she received from Mr. A, effectively it is Mr. B only. Indirectly it is Mr. B only who gave her. So that is why it is cross transfer. So the clubbing provisions will applicable for her spouse only. And who is her spouse? Mr. B. So in whose hands it will be clubbed? Mr. B. Very important question. Straight question on cross transfers. Very clearly we have to observe and understand who is giving money to whom, who is transferring the asset. In this case it doesn't matter. If there is a case of cross transfer, it is almost deemed that Mr. B only giving asset to Mrs. B, because this is a cross transfer. When Mr. B is giving to Mrs. A, Mr. A is giving to Mrs. B. Why they are doing it? If they do like this, if they do in a straight manner like this, then clubbing provisions will apply. So they don't want that. They want to create a cross transfer. So that is their thought. If they do like this, another clubbing provisions will apply. So Mrs. B's income will be taxable in the hands of Mr. B. Mrs. A's income will be taxable in the hands of Mr. A. To avoid this only, they are doing this cross transfer. So we should not give any recognition to that cross transfer. Ultimately, it is as good as a normal transfer. Hence, Mrs. B's income shall be taxable in the hands of Mr. B. So answer is D. Next, question number 7. Scholarship to meet the cost of education received by a minor child is completely exempt from tax. Though it is not given here, remember this provision. This is there in the exemptions chapter. Scholarship for meeting the cost of education is always exemption. Whether it is minor child or other child, it is always exempt from tax. So option is C here. Then question number 8. Income of a minor child from a fixed deposit with a bank made out of income earned from scholarship. What about that? That is not exempt, sir. That should be clubbed in the hands of that parent whose total income before clubbing is higher. So option is B. Clubbing provisions will apply from that. So if the income is earned from scholarship, that is not taxable, or that is not clubbable also, but income on that will be definitely clubbed in the hands of that parent whose income is higher before such clubbing. So option is B. Then question number 9. Mr. X transfers income of 51,000 from rent to his major son without transfer of house property. Should it be clubbed or not? Yes. Here the minor son, major son will not happen. Which provision will apply? Transfer of income without transfer of asset. There is no need of any relationship between transfer or transferee in this case. Incidentally, if he is his major son also, doesn't matter. Still it is taxable in the hands of transferor. So it is taxable in the hands of transferor father. That's it. Incidentally, he is the father of transferee. Even if he is not also, still it will be taxable in the hands of transferor always under section 60. Next, question number 10. Interest from a fixed deposit received by a minor married daughter to be clubbed always. There is no exception here. Always to be clubbed. Minor married daughter is not special. Of course, there is speciality of only income from house property received by her. Here it is talking about interest from fixed deposit, which means it should be clubbed with the income of that parent whose total income before including the minor's income is higher. So naturally, that will be a normal clubbing provisions like any other minor, right? These are the MCQ type questions which are also important to be understood, because as you know, in the main examination also MCQs will definitely be asked from this chapter for sure, guaranteed. And in addition to this, there are some more questions which are given at the end of the chapter for practice. Question number 11, 12 and 13. There are 3 questions here. And some more questions in Girish Ahuja book which you have. Also we will discuss tomorrow how to solve them, how to think. Already we already had a understanding of that. So what is going to happen in the next class is going to be a discussion on these problems, not solving them. Solving is already done. And who has to solve them on paper? You. For that, a guidance will be provided how to solve them, how you think about a question. That we will discuss in the next session. Till that time, once again, be thorough with these provisions. Practice the questions already. Whatever you have already solved, many questions we have solved already. Do them on paper. Don't think just by watching this video you have learned something. This is only part of it. You have to do all these questions on paper, and the remaining things which are all there, which will be also there, question number 13, 12 and 11. These 3 questions we will do. In addition to that, questions in Girish Ahuja also. We'll quickly go through them and what are the key areas to be noted there. But once again, who has to solve them on paper is definitely going to be you. There will not be solving of those things here, unless there is a calculation, which is very important. Otherwise, these provisions are all logical things, where it is applicable, where it is not applicable. Clubbing, applicable or not applicable, that question has to be answered by relevant sections. That cannot be on the basis of something else which is in accordance with our thought process. So whatever the clubbing provisions are applicable, they have to be applied meticulously while solving the questions. So yes, almost as good as we can say this chapter is concluded, but just for quick reference of the other questions also, we will take one more session. From problem solving and examination point of view, provisions explanation and understanding point of view, by now we should be thorough with all the topics of this chapter, clubbing. With that, we'll close this session, and till the next session, take care, bye bye, thank you.